The price of copper started rising since April 2020. Now its price almost doubled. For the same period, S&P 500 increased by 50%. As the recent rise in US interest rate pulled all asset prices down, copper is probably a better alternative than US equities. Mr. Copper is reputed as the leading indicator of the global economy. In the early 21st century, immediate after the Great Recession, or since April 2020, when the Chinese economy began its rebound. In a study by the Dutch bank ABN AMRO published in 2014, shows a strong correlation between copper prices and world trade, regional GDP growth in China, the US, and the European Union, as well as oil and gold prices. Now the price of copper is about to catch up with its record height, and is probably not going to stop there. Since British scientist Michael Faraday discovered the principles of generating electricity, we fell in love with it. Electrical wiring distributes electric power inside residential and commercial buildings, mobile homes, recreational vehicles, boats, and cell phones. Copper is highly conductive of both electrical and thermal energy. Perhaps the most common use of copper are the electrical wiring and in copper pipes used for plumbing in most homes and businesses. But the use of copper isn't just in construction. Small electronic components in your cell phone or the microprocessors in your computer also use copper. It also exists in household appliances like washing machine and dryers. It's used in places where you may or may not realize. By the estimate of Copper Development Association, the percentage of global copper production consumed by each sector is around 65% electrical, 25% industrial, and the last 10% used in transportation and other areas. Because of copper's wide-ranging applications in industrial production and electrical equipment, copper is reputed to have a PhD in economics to predict turning points in the global economy. Since 1968, there were 9 copper bull markets. In average, these bull markets last 29 months. The shortest is 16 months from the second half of 2016 to early 2018. The longest was 62 months after China joined the WTO and everything became made in China. In average, the nominal return for copper during this period was 157%. By historical measures, copper still has 4 to 5 months to go up. So should you invest in copper right now? Let's look at the short-term fundamentals. 2021 will be a year of reflation, higher growth, and strong demand for metals. Immediate demand for physical delivery of copper is reflected in that the cash price is higher than the future price. Copper stocks in MLE registered warehouses is at a historical low level. So to speak, we're having a supply shock due to the pandemic, the market expecting strong demand for copper, and we don't have that much stock in the world's biggest warehouses. In February, Jeff Currie, head of commodity research at Goldman Sachs, added that the key metals such as copper are already at supercycle levels and the story has just begun. He argues that a supercycle emerged when there's a structural upward shift in demand. The world is trying to go green due to environmental policies to fight climate change. It boosts demand for metals to build renewable energy infrastructure, batteries, and electric vehicles. As a matter of fact, not just copper, other commodities like gold, soybean, corn, natural gas all rise more than 50% for the past year. From JP Morgan to Bank of America, and various hedge funds are all calling for wide-range commodities bull market. Hedge funds haven't been this bullish on commodities since the mid-2000s while China was rising. So are we in a super cycle? It does look like one due to the post-pandemic recovery, ultra-loose monetary and fiscal policy, and aggressive environmental policies around the world. But as always, we will never know for sure. I guess in the game of investing, the one and only thing you just have to embrace is uncertainty. For the time being in the US, we're having a bubble in the emerging technology stocks while other stocks may not yet be in the bubble territory. As some stocks' valuation is extremely high by traditional measures, they're more likely to be impacted by the rising interest rate. But for the likes of copper, economic recovery and the slow rebound of supply still provides support for the commodities bull market. So in my opinion, we're probably going to see a simultaneous increase in interest rate, the US dollar, and the price of commodities. But looking at the fundamentals and the risk and reward ratio, it might be wise to add some commodities to your portfolio. Thanks for watching, guys. If you like this video, please hit the like button, try to subscribe, and leave any questions or comments below. I'll try to reply ASAP. By the way, if you're interested why we didn't have inflation for the past 4 decades and why now may be the turning point that inflation may be a problem in the coming years, please check out this video where I talk about is inflation coming after COVID. Again, thanks for watching, guys, and I hope to see you soon in the next video. Cheers!